Welcome to DebtCircle Key Roundups. I am Vijendra.
And I am Leela. First up, Sundaram Alternates has announced the final close of its Performing Credit Opportunities Fund, Series 1, at a substantial Rs 1,200 crores. That's a significant milestone for credit fund managers. Meanwhile, India's MSMEs are facing challenges, with only 14% accessing formal loans, widening the credit gap, a pressing issue for economic growth and financial inclusion. And lastly, PNB Housing Finance is gearing up to launch a bond issue set to run over 3 years, which will be an interesting development in the bond market space to keep an eye on. Plenty to dive into today, Leela. Let's get started.
Sundaram Alternates closed their Performing Credit Opportunities Fund Series 1 at Rs 1,200 crores, focusing on mid-market Indian businesses with a target gross return of over 15%, using a senior secured cash flow-backed strategy across sectors like manufacturing, clean energy, and healthcare, supporting MSMEs underserved by conventional lenders. The fund has already deployed more than 85% of the capital.
This aligns with growing demand for private credit in India as mid-market firms seek flexible capital beyond traditional banks. With a strong 9-year track record, buys Rs 7,500 crores raised and no capital losses, Sundaram Alternates platform offers investor returns between 15 to 20%, reinforcing confidence in structured private credit investments.
Here's another significant update. India's micro, small and medium enterprises face a formal credit gap of 25 trillion rupees by March 2025, with only 14% accessing formal loans, relying heavily on informal lenders that limit business growth.
That gap highlights a major barrier to inclusive growth. Despite 89% adult financial account ownership and 18 billion monthly UPI transactions, only 15% of adults access formal credit, well below the global average of 24%.
The report suggests expanding cash flow-based lending using digital data like goods and services tax records and bank statements, and strengthening infrastructure like the account aggregator framework to improve credit access for small businesses restricted by collateral requirements.
Addressing this could unlock unmet credit demand estimated at 50 trillion rupees, turning digital inclusion and financial services into sustainable economic growth.
Let's look at another key development. PNB Housing Finance is issuing a bond worth Rs 500 crores with a fixed coupon of 7.83% per annum, maturing in about 3 years, carrying a AAA rating from CARE Ratings and India Ratings and Research.
That AAA rating signals very low default risk, but since Shriram Finance with a similar 3-year note at 7.80% and SIDBI are launching similar AAA rated bonds simultaneously, investor demand might spread thin, possibly pushing yields higher for smaller issuers like PNB Housing.
Exactly. The simultaneous supply of these 3-year AAA bonds can cause a new issue premium and shift benchmark yields, affecting secondary market prices for housing finance and non-bank lender bonds, impacting liquidity and investor returns beyond these initial offerings.
Now let's discuss another important development. The Uttar Pradesh cabinet approved Gorakhpur Municipal Corporation to raise 80 crores rupees through municipal bonds for a 211 crores rupees mixed-use commercial and residential project at Jalkal campus.
This bond issuance, aligned with the Securities and Exchange Board of India's municipal debt securities regulations, signals growing financial transparency in urban bodies. The state also offers a grant of Rs 13 crores for every Rs 100 crores raised, improving financial viability and supporting infrastructure like water and sanitation, a key step toward long-term urban development.
Here is another significant update. NTPC Green Energy plans to raise 2,500 crores through unsecured non-convertible debentures with a fixed coupon of 7.27% per annum for 10 years, maturing in 2036.
This long-term funding aligns with their renewable energy expansion. Proceeds will cover capital expenditure, refinance past investments, and extend intercorporate loans to subsidiaries and joint ventures, with the debenture trust deed securing investor interests and reinforcing confidence in the sector's long-term potential.
Let's move on to our next article. Bajaj Housing Finance allotted secured non-convertible debentures worth Rs 1,501 crores, carrying a 7.53% per annum coupon rate, with a tenure of 3 years and 2 months, maturing on the 28th of September 2029.
These are secured by a first pari passu charge on book debts and loan receivables, with full security cover enhancing investor protection. Interest payments start on the 28th of September 2026 and continue annually, with the final payment including the principal on maturity. Listing on the wholesale debt market of BSE Limited will improve liquidity and investor confidence despite the company's mixed stock performance.
Now let's discuss another important development. Poonawalla FinCorp approved a 200 crore rupees Tier 2 non-convertible debenture issue via private placement, strengthening their capital base amid a robust FY26, with assets under management reaching around 67,000 crore rupees as of June 30th, 2026, up from 60,348 crore rupees in March.
That capital move, backed by a recent 2,500 crore rupees equity raise, supports a capital adequacy ratio of 16.83%, well above the 15% regulatory minimum. Profit after tax turned positive at 541 crore rupees in FY26 versus a loss the year before. Gross non-performing assets fell to 1.44% and return on assets turned positive at 1.16%. Maintaining AAA ratings and lowering borrowing costs to 7.73% per annum also signals strong market confidence.
Here's another significant update. Brookfield India Real Estate Trust approved a scheme for its special purpose vehicle, Kairos Properties Private Limited, to offset accumulated losses by June 30th, 2026, adjusting accounts like amalgamation adjustment, equity reserve from convertible debentures, and securities premium purely for financial restructuring without changing the REIT's 50% ownership or economic interest.
So this won't affect Brookfield's stake but will improve future distributions to unit holders, pending regulatory approval from the National Company Law Tribunal. Market-wise, despite short-term volatility, Brookfield India REIT shows a positive long-term trend, up 9.28% over 1 year and 26.22% over 5 years.
Let's move on to our next article. Tata Capital raised Rs 2,750 crores through secured redeemable non-convertible debentures at a coupon rate of 7.88% per annum over a 5-year tenure, maturing on July 7, 2031.
With CRISIL AAA stable and ICRA AAA stable ratings, these NCDs reflect very high credit quality. Interest payments are annual on July 7th, with a security cover of 1 time on movable assets including receivables and a 2% penalty interest for delayed payments. Listing on the National Stock Exchange will enhance liquidity, appealing to conservative risk-averse investors.
Here's another significant update. The government is weighing a merger between ASREC Asset Reconstruction Company, mainly owned by public sector banks like Indian Bank, Union Bank of India, and Life Insurance Corporation, and National Asset Reconstruction Company Limited, to consolidate multiple public sector ARCs into a single entity for better efficiency.
Consolidating these platforms could simplify oversight and improve resolution of non-performing assets. The proposal is still in early stages with no decision finalized, focused on reducing complexity rather than expanding operations, aligning with broader government efforts to enhance financial sector stability.
Let's look at another key development. The Reserve Bank of India is auctioning government bonds worth 32,000 crores on July 10, 2026, including 21,000 crores of the 6.36% bonds maturing in February 2031, and 11,000 crores of the 7.71% bonds maturing in May 2066.
The auction uses a multiple price method via the RBI Mumbai office and the e-Kuba system, with non-competitive bids accepted from 10:30 to 11 a.m. for retail investors through the RBI Retail Direct portal, and competitive bids until 11:30 a.m. plus a special window for primary dealers. Payments for successful bids are due on July 13, 2026, with when issued trading and repo eligibility supporting market depth and liquidity.
Moving to our next story. SEBI mandates foreign portfolio investors to pay fees in Indian rupees starting January 2025. The fixed fee shifts from $1,000 to 90,000 rupees. Registration charges for Category 1 FPIs and FVCIs rise from $2,500 to 2,30,000 rupees, and custodial fees shift from 10 lakh rupees annually to 85,000 rupees monthly.
This eases compliance and improves cash flow management. SEBI also updated FPI registration forms to include date of birth or incorporation, aiding PAN applications, and mutual funds now get intraday borrowing rights to manage settlement mismatches, repayable by day's end and within existing limits, boosting liquidity without increasing overall leverage.
Let's look at another key development. Bank credit surged 17.7% year-on-year to Rs 215.5 lakh crore by mid-June, driven by retail, MSMEs, NBFCs and corporate demand, while deposits grew slower at 12%, reaching Rs 258.4 lakh crore.
This gap pushed the loan-to-deposit ratio to a record 83.4%, up from 83% in March. Certificates of deposit outstanding rose sharply to Rs 667.3 thousand crore, with fresh issuances up 38.1% year-on-year to Rs 100.8 thousand crore, as banks tap market borrowings amid tighter liquidity.
Looking ahead, credit growth may moderate as capital markets improve and corporates shift to lower bond yields, with the Reserve Bank of India focused on deposit mobilization and attracting foreign currency deposits to ease liquidity pressures.
Let's look at another key development. S&P Global Ratings forecasts inflation to rise to 5.1% in fiscal year 2027, driven by weak monsoon rains at 90% of the long period average and rising food and energy prices.
That reflects serious risks to rural demand, since food comprises about 40% of the consumer price index. Key sectors like agrochemicals, tractors, and two-wheelers could see around 10% volume declines, while microfinance institutions face heightened risk with nearly 80% of loans tied to rural activities. The Reserve Bank of India is expected to hold the repo rate steady at 5.25% to manage inflation, though India's broader economy, growing at 7.7%, should limit overall financial stress.
Let's look at another key development. Gold on the multi-commodity exchange opened at Rs 1,45,200 per 10 grams, down 0.13%, while silver dropped 0.36% to Rs 2,30,015 per kilogram, reflecting global bullion weakness and US-Iran tensions, with US gold futures falling 0.5% to $4,136 per ounce.
The geopolitical strain is strengthening the US dollar and raising inflation concerns, along with rising crude oil prices and treasury yields after US military actions on Iran. Technically, gold faces resistance at 1,46,000 rupees and support at 1,44,000, trading below its 20 and 50 exponential moving averages. Silver shows resistance at 2,32,500 and crucial support around 2,23,307, with markets cautious ahead of the Federal Open Market Committee's meeting minutes, though short-covering rallies remain possible.
Moving to our next story. Equitas Small Finance Bank's microfinance loans jumped 70% year-on-year to Rs 6,019 crores by June, and Ujjivan Small Finance Bank grew microloans by 17% to Rs 15,185 crores, prioritizing geographic expansion for higher yields. Meanwhile, Utkarsh Small Finance Bank cut its microfinance book by 36% to Rs 5,480 crores, reducing exposure in Bihar and Uttar Pradesh.
That contrast shows two strategies: aggressive expansion versus risk containment. ESAF and AU small finance banks also reported solid advances growth, with AU at 1,41,000 crores total lending. With unsecured microfinance's elevated credit risk, the market will soon judge which approach best balances growth with sustainable profitability and asset quality.
Let's look at another key development. A mid-market promoter needing Rs 300 crore can choose banks, NBFCs, bonds, or private credit. Banks offer the cheapest capital but are less flexible due to regulatory constraints, while NBFCs move faster and specialize in sectors but have narrow appetites.
Bond markets suit large, highly rated issuers needing long-term capital but demand transparency, while private credit isn't cheap but excels in speed, flexibility, and confidentiality, ideal for acquisitions or complex refinancing. Borrowers often blend sources, using banks for scale and private credit for flexibility, balancing cost and execution risk.
Let's look at another key development. Axis Bank's gross advances rose 18.8% year-on-year to Rs 12,729 billion in Q1 FY27, with deposits climbing 18.2% to Rs 13,729 billion, driven by a 22.8% surge in term deposits.
The quarterly average total deposits also increased by 18.1% year-on-year to 13,048 billion rupees, with CASA average balances up 13.5% despite a slight sequential dip. This robust deposit franchise positions Axis Bank well as they head into their earnings call on July 18th.
Here's another significant update. Gift City has signed a memorandum of understanding with Vietnam International Financial Center Da Nang to share expertise in financial services, fintech, and cross-border investments, supporting Vietnam's development of its international financial center.
This partnership strengthens India-Vietnam financial ties, and Gift City also partnered with Tata Communications and CEPT University to enhance global capability centers, research, and executive education focused on sustainability and urban planning, positioning Gift City as a preferred destination for technology and service businesses.